I'm Manisha Gupta. Well, our focus today is diamonds. Rough diamond prices have declined nearly 20% in the past year. And the last month alone, we have seen the prices fall by nearly 3%. The Zimnisky Global Rough Diamond Index to understand what is putting pressure on the diamond market. I am now joined by Paul Zimnisky, a leading global diamond industry analyst who maintains the widely tracked proprietary rough diamond price index. Paul, hi, thank you so much for joining us. First of all, your sense really on the supply, because that really seems to be getting capped right now with so many legendary mines going for a closure. How are you looking at the supply situation going forward, especially when you have Devik, Venetia and so many mines closing down for good?
Yeah, so I guess just to maybe provide some context. So the industry's really been on a roller coaster the last 5 years. We had record demand for diamonds in 2021 with all that, pandemic era government induced consumer stimulus. But the following 4 years have really been rough. We've been, through a generational phase of inflation. The price of everything is up, but diamonds are one of the very few products that are down. I mean, we're down anywhere from 10 to 50% from that 2021 peak, depending on the category. And that's, had a direct impact on supply. I mean, we've seen, diamond prices down, but operating costs are up. The price of everything from, diesel fuel to labor to machinery to truck tires, prices are up, and that's really squeezed the miners. And, over the last year alone, we've seen at least 10 major diamond mines that have either halted production or outright closed. And that puts us in a situation where, supply is down significantly. I estimate we're going to have, maybe 90 million carats of natural diamonds produced this year. And that compares to over 150 million pre-pandemic. So I think this year we're looking at the lowest natural diamond supply since 1987, according to my data. So the supply situation is very notable at the moment.
Oh, wow. So from 150 million carats last year to 99 million carats this year, that's quite a considerable decline, as you tell us, Paul. Are we looking at a permanent downsizing of the market, or is this a temporary cyclical low that we are looking at in sense of diamond supplies globally?
Well, the thing with diamond mining is it takes a lot of money and a lot of time to put a new mine into production. So I think we do have, a secular trend of decreasing diamond supply. I think it's, directly relates to the rarity of large economic commercial diamond deposits, right? So I think we're going to probably be in that 90 million to maybe 120 million carats for the foreseeable future.
All right, so 92 to 120 million ounces in carats rather in sense of diamond availability. Paul, let's also talk about the prices now. And while the commercial stones under 1 carat remain under pressure, the premium large stones are looking at gains. How are you looking at this trend? And I take your point, as you said earlier, that from 2021 peak, we've seen diamond prices come down anywhere between 10 to 50% for some of them. Are we looking at some recovery? Have we seen a bottom?
Yeah, it's a good point. So, for instance, like the 3 carat and larger size polish, so the finished diamonds, that's a hot category right now. And the availability of that supply has significantly declined. I estimate that there's going to be maybe approximately 100,000 diamonds that are in that 3+ carat size range produced this year. And that's down from over 200,000 carats pre-pandemic. So, for context, Rolex will produce, say 1 million watches a year. So I think it kind of puts into context how, rare some of these larger diamonds are becoming. And that's definitely impacting prices. It's definitely that maybe that smaller to mid-tier category of diamonds that are going to continue to probably be pressured because of the, introduction and competition from man-made diamonds, the lab-grown diamonds. So I think that's going to be the category of the market that the natural diamond industry is going to have to continue to fight for.
Oh, well, absolutely. As you said, there have been various reasons that have put pressure onto the diamond prices there. Would you also say, Paul, that the natural diamond prices are now near bottoming out? What would it mean for the retail luxury markets then?
Yeah, so I think maybe something your listeners especially will be interested in, given India's stranglehold in the manufacturing segment of the industry. I estimate that midstream inventories, so that's diamonds held by the manufacturers and the wholesalers. I think I estimate we're at approximately $30 billion worth of inventory globally right now, and that's down from 45 billion just 2 years ago. So, I think we're going to continue to have, tight supplies. And I think if we do see a resurgence in demand for natural diamonds, I do think that, sets up a situation where we could see, a real spike higher in prices in the near term.
And Paul, where would that bring us in sense of prices? How much higher would prices be, let's say, from a year from now for many of these diamond categories?
Yeah, I mean, it's a very nuanced industry. Like I said, there's certain categories that are outperforming. There's certain categories that are underperforming. So I think it's just kind of a matter of what particular areas we're looking in. Again, I think these larger, higher value diamonds. I mean, these are diamonds that consumers will spend $10,000, $100,000 for. I think that category is going to remain relatively strong. But it's going to be that medium-sized category, and it comes down to, can the industry convince consumers around the world and in major markets like the U.S. to buy, say, a 1 carat natural diamond instead of a 3 or 4 carat perfect quality lab-grown diamond, and that's where the marketing really comes into play.
Oh, well, absolutely. Would you also say that the impact or the disruption caused by lab-grown diamonds to natural diamonds is now done with? Would you say it has its own category, its own buyers right now with much awareness?
Yeah, so I think it's important to understand that when we look at, like, say, the industrial segment of the market, so these are diamonds that are used for, say, cutting tools and, special, technological, fabrication and that sort of thing. The synthetic diamond basically took over the natural diamond market in the 1980s. For context, there'll be 1 billion carats of industrial quality synthetic diamond produced, this year alone. So we're talking, 98, 99% of diamonds for synthetic application are already, or diamonds for industrial application are already synthetic diamonds. So I think that's what's possible. But I would also note that if lab-grown diamonds were going to completely take over the natural segment of the diamond jewelry industry, I think that would have already happened. I mean, there's certainly enough supply to do that. There's unlimited lab-grown diamond supply. It's a made-to-order manufactured product. I mean, but I think the fact that the natural diamond industry still holds about half of that market makes it clear that consumers still want natural diamonds. I mean, if you look at celebrities and I would say people that actually work in the diamond industry, they overwhelmingly still seem to want natural diamonds. So I think that says something, and I think we're heading into this world where it's getting more and more difficult to tell the difference between, say, AI-generated music and movies and writing. And I think, we're getting to a place where I think people are actually going to want natural things to gravitate to. And I think diamonds are a great, representation of that. It's something you wear every day. And you can distinguish, natural diamonds from lab-grown diamonds. So I think, this remains a huge opportunity for the industry. I think it has to get its messaging out. But I would actually argue that we're getting into a phase where it actually really does favor natural diamonds, given where we're headed.
Paul, then what would you say has been the impact of the West Asia conflict on the overall global diamond trade? I mean, it has impacted various other segments and sectors and companies for that matter. Has it impacted diamonds as well?
Yeah, I mean, from what I've seen, it's more of a macro impact. It's the price of oil's up, the price of diesel's up, the price of goods are getting up. I think middle-class consumers are certainly feeling the impact of that with their everyday expenditures. And again, I think that kind of gets back to what you're saying with the K-shaped recovery, where we're certainly seeing the higher end of the market is much more resilient. These people are less impacted by, say, the price of oil and the price of gasoline. So, that's something we've seen for a long time. I mean, the higher end is always a more resilient part of the market. But at the end of the day, the industry needs all segments of the market to buy diamonds if you really want to see a strong market. So that's going to continue to be, a very sensible, it's going to be a sensitive variable going forward.
All right, Paul, so how would you look at the demand going forward from here? India is growing. US seems to be doing okay. It is the largest market by market share in that sense. China doesn't seem to be coming back as strongly as Street anticipated. How would you look at also Europe? And are you looking at West Asia? Are you looking at newer markets which are now wanting or have aspirations for diamonds?
Yeah, I mean, everybody wants to talk about, the impact of lab-grown diamonds and how that's impacted the natural diamond market. But you make a good point. I mean, China, has been the second largest consumer of diamonds the last 2 decades. And demand in China is down 50% over the last 2-3 years alone. Residential real estate prices in China have fallen below 2005 levels, essentially erasing 2 decades of gains. So that's really impacted, consumer sentiment in China. And there's also been a cultural drive in China that kind of put a damper on conspicuous luxury consumption. So, I mean, this has been felt by the industry. I think the industry needs a recovery and a strong China to ultimately get back to where we are. I wouldn't give up on China. I think it would be crazy to give up on China. I think China remains, a tremendous opportunity for the industry. But if we can see, continued resilience in the U.S., continued strong growth in India, and if we see a recovery in China, I think that would really set up the industry strongly.
All right. Well, yes, China hasn't come back, but I take your point that China will at some point perhaps come back into diamonds. Interestingly, Paul, when you talk about India, diamond really hasn't been a good investment. I mean, as you yourself said, that the last 3 years haven't given us a return. Now, when you talk about people in India, they buy diamond as a luxury, not as an investment. They would rather buy gold. Then how are you looking at this demarcation?
Yeah, I think this is most, the case when we're talking about those higher end diamonds. Again, the 3-4 carat plus polished goods, especially in the high quality, fancy cut shapes. Again, I mean, these are diamonds that could sell for, $50,000, $100,000 US. So, I mean, I think the consumers buying this they tend to be pretty smart people. And I think they do look at it, in part as an investment that they could wear. So, I think this is definitely more the case at the higher end of the market. At the lower end of the market, that's going to be less of a case.
Oh, well, that clearly has been the case. So less than 1 carat diamonds have done quite well. Actually, 4 to 6% of gains is what we've seen in the matter of last fortnight as well. Paul, as always, thank you so much for joining and making sense of what the diamond industry really looks like. There are supply concerns. There is demand that is coming back, and the prices perhaps have made a bottom. Well, on that note, it's time for a short break, but do not go anywhere.